All right, everybody, welcome back to another episode of the Crypto 101 podcast. I'm your host, Bryce Paul. I'm very excited for this episode. As you can see, we are live, we are in person, we're in Austin, and this is Austin. This is Austin Barak, who's the founder, the CEO, the chief investment officer of Relayer Capital, which is a liquid cryptocurrency hedge fund. Full disclosure, Tower 18, my hedge fund, is an investor in his hedge fund as well. Austin, thanks for joining us.
Glad to be here.
How you doing?
Doing well. It's been a great conference so far. I have the name Austin, but I hadn't been to Austin until last year. Now I've been 3 times in the last couple months for all the conferences.
Love it.
But yeah, it's been a great conference, meeting a ton of really interesting folks across a bunch of different ecosystems. And that's one of the things that's been really exciting to see, where there'd been, in the past, the Ethereum community, the Bitcoin community, Solana, Avalanche, elsewhere, and they were very kind of siloed communities to some extent, and we're seeing a ton of crossover, seeing folks from all those different communities at the different events, and really just interesting things being built across the board.
It's good bull market vibes. I think people are like, hey, there's enough to go around now, but in the bear markets, the knives are out, right?
Yeah, and everyone's building like pretty unique and differentiated tech, and I think the pie is large enough for everyone.
Absolutely. So before we dive into your big brain and all the things that are going on, we actually just want to take a step back. Who are you? How did you get into crypto? And how did you actually end up, being a hedge fund manager and owning your own hedge fund?
Yeah, so it's kind of an interesting journey. I started trading stocks when I was 10, so a little bit of an unusual upbringing, and I've just always been fascinated by financial markets. Started trading equity options when I was 16 and knew that, running a fund was what I wanted to do. So I studied finance undergrad, very direct path, and then did some, trading in banking internships and realized hey, this is not really the route that I want to take. It's kind of
here's
boring.
What I thought it was going to be, like what the movie said, and then here's actually what I'm doing.
Yeah, exactly. And I ended up connecting with a really interesting early stage cross-border payments company and decided to start my career there. My roommate in college was big into startups and pushed me along that path. And right around that same time, I actually first came across Bitcoin through a poker game when Bitcoin was 40.
Oh wow! So this was a long time ago.
This was 2013.
$40, not $40,000.
Yeah, so 1,500x ago, which is pretty wild to say.
Yeah.
But yeah, it was tangentially related to what I was doing at the cross-border payments company, and it was really in 2016 when I first came across Ethereum that this much broader surface area for building just captivated me. Mm-hmm. And I was really fascinated by what could be done with crypto, even though the use cases and applications were really early on. Like a lot of other people in that era in 2016, 2017, I became all consumed by crypto. So I was working at Payoneer during the day, nights, weekends, sacrificing lots of sleep to kind of go to meetups, to invest, to experiment with a couple of things. 2018 went full time, started a DeFi borrow lend money market protocol in the early days of DeFi. Was at the ETF issuer, 21 Shares.
Oh yeah, great.
Yeah, and then in DeFi summer 2020, connected with the Coin Fund folks, and we just completely aligned on where we saw the market was going in terms of the investment philosophy, and great group of people there. Spent 3.5 years as a partner investing across venture and liquid, splitting my time about 50-50. Invested in some really interesting protocols. So the earliest institutional round at WorldCoin, invested in Moonbeam, GoGoPool, Manta Network, really early to a whole bunch of things in Solana and Avalanche. And ultimately got to the point where I just had that combination of a founder itch and wanting to launch my own fund since I was 10 years old or so that I decided to pull the trigger and left in December, went live with the fund in February, and I've been going for 4 months now.
I love it. I love you were destined to be a hedge fund manager, and it's really cool. I mean, I definitely when I was 10, I didn't think I was going to be what I am today. So it's cool to see two separate paths, but here we are.
Well, I was a huge basketball fan and player and everything as a kid, and I think at age 14 I realized I wasn't going to make it to the NBA, and that's when my goal and dream shifted a little bit.
That's awesome. So relayer. I've always wanted to ask you this. We got drinks last night. I was going to bring it up. I was like, oh, I'll save it for the podcast. What's in the name? Why do you call it relayer?
Yeah, so a couple things. One, the idea of relayers as really critical infrastructure within blockchain protocols in terms of transmitting information between different parties within Oracle networks, within bridges, and elsewhere, and the need for those to be trustless, to be decentralized, and the critical role that they play. But then also a duality of meaning with relayer as kind of relayering the internet. And then the third part, you'd be shocked at how many names are taken when you're looking at the like entity registration database.
Yeah.
So it's a combination of those two things and available.
Yeah, totally.
Yeah, no, but it's a name, like when you're picking a name, it's almost a scarier process than launching the thing, because it's the name, it's the brand, the thing you're going to be with, and I'm glad I picked that name because it's I've enjoyed using it all about.
Yeah, it's like naming your baby, right?
Yeah.
You're like, it's got to be a good one because this is going to stick.
Yeah.
Well, tell us a little bit about your investment philosophy, and whether at your firm or just in general, how do you think about the space and making money out of it?
Yeah. So a couple things. One, I think crypto is pretty unique in that you have a lot of projects, protocols that launch a token really early on in their life cycle. And you don't see that generally in tech and in Web 2, where an IPO will be primarily for companies that are much more mature. So you have this interesting bifurcation between projects that are still private and early stage, projects that are early stage and liquid, but generally at the same stage of development. So the way I've structured the fund is to be hybrid, liquid, and venture, taking a long-term view. And the reason for that is if you're only doing one or the other, you're missing half of the market, and I think you're at a material disadvantage.
Totally.
But also, there's so much that you can learn by speaking with teams on the venture side to get a better understanding of where things are headed elsewhere in the market, and vice versa, in terms of working with protocols that already have live tokens to be helpful to teams that I invest in, whether it's on go to market with the token, building incentive programs and airdrops and point systems and seasons.
Yeah.
And that's something that I like to work with teams a lot on.
Yeah, so that's interesting. I actually want to dive in a little bit deeper there. A lot of times people think a hedge fund, they're purely extractive and they're just long in the market and shorting the market, but they're not actually helping the companies build. But you take a very different approach. I mean, you roll up your sleeves, you're talking to the founders, you're helping them come up with their tokenomics, helping them come up with their marketing strategies, everything. So tell us a little bit more about that, and like really what's most important. What do teams often overlook that you're trying to really get, because you went to Wharton, right?
Yeah.
I mean, you've got a much different mindset than I think a lot of people who are just going out and launching tokens and stuff like that, who are mostly developers, right?
Yeah, no, that's a great point. And what I try to bring to the table is, one, I see a lot as an investor in the market. So that 10,000-foot view that, when you're a builder and you're building your specific project, you don't have time to follow what everyone else is doing,
Totally.
to provide those insights. But also,
That's a good point.
Just quantitatively, what I've seen be effective, what I've seen work, using like real data analysis. That was actually one of the things that I did early in my career at Payoneer, building out data analytics there to determine what's more likely to find success. And then also, one thing that I pride myself in as an investor is being a user of all of these protocols as well. So like, if I'm, trading options for the fund, I'll trade options on chain and use those actual DeFi protocols. So being able to come to these protocols, not only as someone at a 10,000-foot view, but someone as a, I would say pretty informed customer or user of the protocol, to help them iterate on product design and where the different user pain points are. But yeah, during my time at CoinFund, I invested in 23 different companies and protocols, and that was just on the venture side, not even liquid, where I work closely with teams. So I was spending directionally probably like 10 to 20 hours a week working closely with teams. And one of the things that I really try to bring to the table is you can have investors that want to be involved, but then it's almost a distraction because the team spend half their, or like almost all of the time that they're working with the investor just updating them
Right.
on what they're doing. And my philosophy and what I tell teams is, if you're busy, if your head's down, we don't need to catch up. Like, if there's nothing that I can be helpful with, like, let's catch up next time.
Yeah, we invested in you because we trust you and we believe you, and we're not going to be super helicopter mom.
Yeah, I'm not going to be prescriptive on, like, at the end of the day, exactly what you said, like, an early stage investment is centered almost entirely on the founder. So you have to have that belief in the founder. However, if you want to brainstorm on a new product, a new incentive design, building your deck for the next fundraise, which other investors would be helpful to bring on, then I'm just happy to jam.
Absolutely. What is it kind of about a founder? We actually had a founder that was on the Crypto Community Summit, Cooper Scanlon from Movement Labs, who we passed in the elevator on the way up to this interview, so he's top of mind. Just a very impressive kid, right? And there's just kind of a je ne sais quoi, right? That something that you can't really explain, the intangibles, if you will. Our super producer TiVo back here is got many intangibles of just knowing things, having that sort of sensibility. But what is it about a founder that gets you from, hey, you're a great guy, it's a smart idea, but I'm not sure if we're ready to take this project on, to take my money?
Yeah, so there's a couple things. One is just someone that's innately a problem solver. There's so many obstacles that you face as a founder, and if you get easily discouraged or allow it to slow you down, or you hit a blocker in one direction, you gotta spin around it. So someone that has ideally, if they're a multi-time founder and has had success or at least had useful experiences in the past, proven that they're a problem solver, or that's also something that I think you can, from having enough conversations with someone, that you can start to draw out. So that's one piece. Another piece is they need to be the absolute subject matter expert in what they're building. And that's something that you would imagine is obvious, right? That's straightforward. But investors don't often get to the bottom of it because I think they can be afraid to seem like they don't know like exactly what that founder is building. And I try and be really humble, and I'm very, very comfortable asking lots of questions, and I should know less than the founder about what they're building.
Yes, absolutely.
So I want to really, really dig in on that. And then also just one general heuristic, I think you need to have at least one of the founders be highly technical. I found that having none of the founders be technical and bring that on later is generally a
red
tougher
flag.
I would say a yellow flag. I don't think it's impossible, but it's a much tougher road to success. And then the other bit is, so much of building in crypto is building a community. So you need to have someone that can communicate the story in a really persuasive and charismatic way. Because whether it's hiring employees, whether it's being good at capital raising is a skill.
Totally.
It de-risks raising funds in the future, and that's one of the toughest things to do. Or getting people excited about using your product. So I think someone needs to be really, really passionate about what they're building, and that passion usually comes off as charisma and gets other people excited about it as well.
Totally. No, those are great heuristics to think with. And when you kind of think about investing across the space, where do you focus most of your time? We've spoken to some investors today that are meme coin investors that said, this is kind of what we do. We think that this has the best total addressable market, all that kind of stuff. Spoke to some other folks who said we explicitly invest in L1s. We think all the application chains are not going to, or all the applications aren't going to accrue value. How do you kind of think about it?
Yeah, so I look at the market and a couple different verticals that I'm most excited about, but the overarching theme is investing in the protocols, the teams, the different layers of the stack that are going to drive mainstream adoption, and that's the guiding principle. But when I think about the areas of the market that I think are most likely to find that, and where I also think that I have the most kind of competency and able to spot the most interesting opportunities, are highly scalable infrastructure, DeFi, and DePIN. So those are the three segments that I look at the most. Within highly scalable infrastructure, I think it's less contrarian than it was in the past, that like faster in a better user experience is usually better, is usually going to drive more adoption. So, things like Solana are something that I'm really, really excited about. Really interesting parts of their stack in terms of like parallelization, local fee markets, scaling with hardware, so that as you get advancements in hardware, you can also scale the protocol. And the way Solana does it in a monolithic way about having all the applications on the same chain and this really, really wide composability. But also on the other end of scalability, I believe there's going to be a really meaningful need for application-specific chains and L1s that are customizable, flexible, and are meeting the use case and design parameters of applications. And there's a couple, but also you need to have these application-specific chains be interoperable. They can't just live in
their silo.
Yeah, live in their silo. That's generally why, for a variety of other reasons as well, permission chains like struggle.
Yeah.
And we haven't really seen success there. But Avalanche in particular is one that I'm really excited about. Has a super interesting and scalable tech stack. You can flexibility to use pretty much any virtual machine, interoperability between subnets, which is the layer ones, the infrastructure for building layer ones, really fast finality. So yeah, I kind of look at those two segments as not really being competitive, but complementary.
Sure.
And then on the DeepIn side, that more so than gaming and social is where I believe we're going to find the like really killer use cases in crypto and onboard millions, tens of millions of users. Because whether it's something like Helium for 5G mobile internet or HiveMapper for like a Google Maps competitor in providing mapping data to self-driving car companies and mapping applications and others, or something like Demo for car driving data, it's a use case that's really approachable for mainstream normies, so to speak, like people that don't have a lot of exposure to crypto. They're like, well, okay, I can understand why if you build a decentralized network, it can be more resilient, it can be cheaper. There's these really interesting incentives to onboard and start to participate in the network. The technical barriers to entry are much lower than they've ever been, where if you want to spin up a Helium node or use Helium as your mobile plan, you don't need to be a developer to do it. And then you can start to participate in the success and own these networks. So that's another segment I'm really excited about. And one of the reasons I'm actually very excited about Solana is we're seeing most of the DeepIn development happen on Solana.
Totally.
So that's a really strong indicator. And then the other side is DeFi, where in the past it's been mostly for crypto natives, but user experience is improving a lot with both lower cost, faster transactions, better wallets, obfuscating things like seed phrases and all of the parts that make crypto scary to use.
Yeah. It's getting easier finally.
It's getting easier. Yeah.
No, I'm with you. Coinbase's smart wallet. I know there's lots of different technology that's kind of finally starting to come out that just makes it so you don't have to think about all the scary stuff, right, with crypto.
Yeah.
Tell me about because again, you have a hard finance background, and so when you were trading the stocks at 10 and 16 and all this stuff, you were probably looking at PE ratios or doing some kind of valuations on basically the cash flows, discounting those. Tell me how you kind of think about valuations in crypto. I mean, you can't take the old model and just apply it here, or can you?
So I think yes and no, but I actually do port a lot of the philosophies and strategies that I was doing then to how I approach crypto, in that it ends up being a combination of fundamental factors and narrative, story, momentum factors. I think just by virtue of the fact that crypto is a lot earlier stage, there's often fewer fundamentals that you can anchor in on, and it's more narrative driven. But there's still really strong fundamentals in terms of like what the technology is, what the team is doing, how they're approaching product, how they're executing on their roadmap, and using those as key data points versus necessarily like what's the cash flow, what's the revenue, what are the gross margins, how are those evolving over time. But in a lot of protocols, you can actually do that. So something like Pendle, for example, is making a ton of money on swap volume, on the yield from splitting the yield and principal tokens. DEXs generate decent amount of revenue. Uniswap is likely, turning on their fee switch soon.
I hope.
Yeah, so that's really interesting. On the deep inside, like resource networks, for example, they're earning real revenue. Granted, it's still early. So I think, and then also just looking at layer ones, Solana was a story for a while. It's like, oh, it's fast and cheap, but it's not earning revenue like Ethereum. Ethereum had been for a while now actually pretty easy to model because you could just apply multiple to how much is going to validators, how much is being burned, and what the relative value accrual of the network. But we're seeing more adoption and usage in other networks where you can start to track, like with Solana, for example, there's a lot more usage, a lot more fees. There's a lot of MEV revenue that's now starting to accrue.
Next.
Jito's a position in the fund, and full disclosure, something that I'm really excited about, and I think MEV is a really, really interesting way for layer ones to capture value. And I've actually made a venture investment as well in another protocol that's tackling MEV in a different ecosystem, silo staking. I think there's the fundamental pieces, but the narrative is really just a combination of those two.
Totally. I kind of want to dive a little bit deeper into MEV because you don't often get somebody of your caliber and expertise to kind of hash these things out at a crypto 101 level, right?
Yeah.
I've seen several podcasts where, gigabrains are going in for 2 hours talking about the technicalities of MEV. I'm just looking for, give us a 101 level definition. First off, MEV, what's it stand for? Why are people doing it? And how is this value accruing back to, everyday holders of Ethereum and Solana, or is that accruing back to us?
Yeah, it is. So MEV, maximum extractable value, it's fundamentally the additional value that validators and block builders can produce by being the ones that order transactions and determine what's included in a block and what's the order in which it's included in a block. And because the validator is able to do that, there are opportunities for them to earn incremental revenue by also submitting trades. But really the way that ends up getting solved is you have folks that, bribe is interesting because in like traditional world it's a dirty word, but it's like a very common word in crypto just in terms of like how incentive flows through the system. But you can have folks that tip validators and give them additional revenue to incentivize like
their transaction to get done first? Or?
Their transaction to get done first, what the order of a given block is, and provide like an extra level of urgency of the transaction beyond just paying a priority fee or higher gas fees, for example. And depending on the level of economic activity on a chain, MEV can be really substantial. So for example, Ethereum and Solana are doing, which is where most of the MEV today are both doing, over $1 million of MEV revenue.
Every day?
Every single day.
Wow.
Flashbots is one of the pioneering protocols that was building MEV and within the Ethereum ecosystem. Jito, which is a liquid staking provider, but also pioneering MEV and the major MEV client within Solana that other validators are using as well.
It's so fascinating to me that MEV, because I remember when I first heard about it, it was like such a bad thing. And there's sandwich attacks and front running. And then all of a sudden, what happened? How did MEV go from this like nefarious activity to now being a legitimate sort of enterprise, I guess, within crypto?
Yeah, so there's good MEV and there's bad MEV. And the bad MEV is things like front running a transaction, or so if you want to make a trade, someone seeing that you want to make the trade and making the trade first, or a sandwich attack where they see you want to make a trade, so they'll make it first, you're forced to buy it at a higher price, and then they sell it and they profit there. So that's the bad form of MEV.
Yeah, it's illegal.
Yeah, and that's been minimized pretty meaningfully. But the non-nefarious MEV is things like, hey, there's going to be a liquidation on chain, and there's if you're the one that's able to do actually process that liquidation, there's a bonus that you can make from the borrow lend protocol. So having that information and being the first one to do that creates a profitable situation, and someone is going to do that versus someone else, and that's not artificial behavior. So I think there's the difference between those sorts of things. But yeah, I mean, there still is nefarious MEV, and that happens. But I think it's just like that good MEV, that piece of the pie has grown pretty substantially.
So how big do you really think the crypto markets can get this cycle?
Yeah.
And I think over time, like my thesis is that, crypto will just be pervasive, and like banks will be running on blockchains, and every, piece of infrastructure will be running on blockchains, but that's, maybe 20 years out or something. But in this next cycle, and then also, even, part of like, governments are going to be holding Bitcoin. I mean, I think the total market cap of crypto is going to be the total market cap of all assets in the world, essentially. It's going to eat the world. But in the short term, how do you think about like is this going to top out at 10, 20 trillion?
Yeah, so that's an interesting question. And I think to some extent a traditional 4-year cycle. But the fact that we have a Bitcoin ETF will likely very soon, or now it's a matter of when, not if, have the Ethereum ETF and others down the line. It's structurally a little bit different, where there's much larger and many more participants than there have been in the past. There's a steady flow of inflows through those sorts of products as traditional investors look to get their target exposure within the sector, and they can get it through equity markets where it was difficult to do otherwise in terms of like operational, managing custody, getting exposure only through a fund or things like that. So I think the drawdowns that we're going to see in this cycle won't be quite as severe as we've seen in the past. So, the past.
I hope.
Yeah, I think we all hope. A little bit of hopium there. But yeah, so I Bitcoin and Ethereum in the last cycle went down about 70%. A lot of other assets went down 90% plus. I think Bitcoin and Ethereum are likely to maybe go down 50%, but not quite see quite as large a drawdown. And 50% is still large, but the reason is...
And it'll probably be 50% after we break above 100K or something like that.
Yeah, break to these really, really high levels. When there's a ton of euphoria, and there's always euphoria in an industry where there's so much potential.
Totally.
Things get overextended and then pull back. But as far as how large things can get, I think we can definitely hit $10 trillion this cycle. Right now, total market cap of crypto is just about 3 trillion. So that would be more than a 3x from here, and we're likely to see significantly larger gains in terms of multiples and other assets outside of Bitcoin and Ethereum. There's areas of the market that there's really interesting, unique things being built that are ready for prime time, because in the last cycle it was mostly about what could be built versus now the tech is built, and it's about bringing new applications to market, bringing traditional users to start to use those applications. So I think 10 trillion. I think we're going to see hundreds of millions of users be on chain. We've traditionally seen Bitcoin and Ethereum top out about a year after surpassing their all-time high. I think combination of more real-world use cases that are crossing over into mainstream, plus the political tides turning a lot as well,
Big
and
time.
being more supportive, that should give the cycle a little bit more time as well. But I'm really bullish. Not all of this goes without saying, not financial advice.
Never.
But yeah, happy to dig into some of the specifics as well.
No, it's funny. Another hedge fund manager told me that he goes, when the internet.com bubble burst, it actually, if you adjust it for inflation, it was actually like a $50 trillion bubble. That's crazy to think about. And he goes, and you know what? It was also just a U.S. phenomenon. Crypto's a global phenomenon, and we're at $3 trillion.
Yeah.
And so, if we got to 50 trillion, you got to kind of step back and be like, holy smokes, that would be crazy. But he goes, that's even within the realm of possibility. And he's a billion-dollar hedge fund manager. And it's like when you kind of think from that perspective, and you have a little bit of precedent, right, from the last technology boom, because I believe, like you, crypto is just as significant as the internet. I mean, maybe even, marginally more so. And so, it's just crazy to think with that. But I kind of want to, switch gears a little bit. I want to talk to the folks in the audience, and basically, in a sense, how can folks learn from you? What advice would you have for somebody who's entering the market and who wants to be a trader? How do you succeed, basicry?
Yeah, so read as much as you can. Don't take any one data point as gospel. Try and look at the market from as many views as you can. And there is tribalism, and people are maximalist for one form of technology versus another, which is really interesting because you typically haven't seen that in other industries where you're like, I don't know, I guess maybe like an Apple maximalist is something in terms of like loving the products, but like you don't normally sort of see that kind of thing. But try and move outside of echo chambers as well. There's a lot of data to look at on chain when you're thinking about traditional equities. You have quarterly reports that come out on a quarterly basis, and that's how you can analyze the relative progress of a company. For protocols, it's on a block by block by block basis. Where
every second.
Every second, and it's all on chain, and there's great resources like Dune Analytics and Token Terminal and a whole bunch of others, Nansen, that allow you to track what's happening on chain. Go to as many events as you can, meet with as many people, cold DM, ask a friend for an intro. The one thing that I really love about crypto is how approachable people are and how willing folks are to just have a conversation, particularly with someone that maybe doesn't know a lot. Everyone had that group of people that help them dig down the rabbit hole, and there's this concept of pay it forward that people really, that's part of the ethos of crypto. And some of the other things, I guess, there's more noise now than when I first got into crypto and like crypto Twitter versus like the absolute amount of signal.
Totally.
But staying on the ground in terms of what's happening there is really being closest to like the beating heart of crypto. And there's other social applications, things like Farcaster that are starting to build really large communities. So yeah, that's the way that I would go about it. And the really great thing, and also a lot of venture investors, when they make an investment, publish a blog post and a thesis for why they made that investment. I do that, and I publish pretty prolifically, and tweet a lot, and folks at a lot of other top firms do that as well. And that's really valuable to get in the mind of the investor and why they made that decision, and how they see the market evolving over time. So just consuming as many of those as possible, and also listening to podcasts where you can get this inside view into the minds and how a lot of folks in the industry are thinking about things.
Absolutely. As you kind of look out over the course of the rest of the year, what outside of the Ethereum ETF, which we discussed, what other market moving events, what other sort of exciting things are you looking forward to?
Yeah, so Avalanche, I think, is pretty under the radar. There's a new proposal, ACP 77, that's going to make...
Gonna write it down?
Yeah.
Here's my pen.
It's making Avalanche a lot more interoperable, a lot more programmable. It's reducing some of the friction points around what a validator needs to do to participate in different parts of the network. And I think that'll be pretty widely adopted infrastructure for the launch of new layer 1 protocols, but be able to do it in a way that's pretty prepackaged to some extent, where when you're building an L1 in other environments, there's a lot of blockchain development heavy lifting, where that framework actually makes it customizable, flexible, but pretty easy to use. So I think we're going to see a lot there. Solana Fire Dancer, really excited about. Fire Dancer is a new much more performant client for Solana that should be able to allow for 1 million transactions per second on Solana, which I think right now there's not necessarily demand for a million transactions per second, but one of the really valuable things is having client diversity makes the network that much more resilient. So combination of like unbounding scalability in this monolithic composable environment, but also making that environment much more resilient. The evolution of what we're seeing on Base and how it's pulling in so many mainstream users. Growth of meme coins. Meme coins, I think it was Andrew Kang had a tweet about this yesterday or like a couple days ago, where meme coins had been a lagging indicator in the past, where that was the last asset that people bought. It was the furthest end of the risk curve. But now it's often a leading indicator because it's how people get into crypto.
That's crazy.
And I think it's one of the really nice early examples of product market fit within decentralized social. And there's good and there's bad to meme coins, but it's pulling in lots of users. It's getting people comfortable with interacting on chain. It's building these really interesting communities that are aligned around different segments of the market. So I think we'll see a lot more of that. And
that's a lot.
Yeah. I mean, like continued evolution, a whole bunch of things on the deep inside. I mentioned like user experience obfuscation for DeFi. A couple interesting gaming protocols coming through, and I don't focus as much on gaming, but I think we're seeing both a lot of AAA games that have been in development for years finally about to hit market, and AAA game is a really hard thing to build, so I think people were impatient in the past, but now they're coming to market, or also just like casual mobile games that are easy to engage with. So a lot is coming.
Yeah, there's a lot coming. Before I let you go, have you hit the conference floor yet?
Yeah, I've been at the conference.
Yeah, what if you were to pick one thing that you thought was the most surprising, the most exciting, anything new that you've seen out there, and all the good citizens of Crypt Nation who couldn't attend the conference, what was kind of that one can't miss booth?
Yeah, so I don't know if there's one can't miss booth, but overall, so I mentioned the fact that there's no such thing really as an Ethereum conference or a Bitcoin conference, anymore. It's everybody is coming with a common goal, a common purpose. So you see people from all over.
It's collaborative.
So it's very, very collaborative. And also really interesting signs in terms of like, it's clear that we're in the early to mid stages of a bull market, but I haven't seen any of the crazy euphoria where people are only talking about price, or people are sharing like the P&L and how much they made on this or that. But it's been like, as much as it's a cliche to say, it's like it's been about the tech, and that's something that's been really exciting. And I guess just the one other thing, this collective sigh of relief that the political landscape has started to shift, and now there's this recognition that crypto users are a legitimate and voting bloc, but also like really, really promising technology that's trying to build unique and valuable things. And the fact that it's not swimming against the current anymore has been just pervasive.
It's been awesome to see. It's totally been awesome to experience. And I'm really excited about everything that you're doing. Obviously, I'm really excited to be following along with your success. Ladies and gentlemen, hopefully you enjoyed meeting Austin Barak, who is the founder and the manager of Relayer Capital. We hope to have you back on again soon when there's a big announcement or any big rounds that you guys are looking at. We're always interested to know. And until next time, Austin, thank you so much.
Yeah, it was great being here.
Awesome. All right, everybody. Come back again, same time, same place next week, and we're going to have some more awesome guests.